Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is the legend himself, Willem Middelkoop, author of The Great Reset and founder the Big Reset and the founder of Commodity Discovery Fund. Willem, welcome back.
You know, Klaus Schwab, he stole it, and now everybody's talking about the Great Reset. But I'm the OG. You know, I started this all.
That's right, you are the OG. So, Willem, the world's on fire, and you see the stock market is on fire as well. Could we see another 20% drop in the stock market from where we are right now?
Yeah, of course, we had this bull market, which took over 10 years, 11 years, and everything was so extended. So it was only a question when the correction would start. We saw that at the beginning of this year, especially in tech stocks. We're now in a major correction. Everything is correcting, even gold and silver. People are always surprised when gold and silver are correcting as well. I remember Lehman at the end of 2008. And everybody was phoning me and asking me, why is gold going down? Gold went down 30% during that crisis. And I always told people, you know, just be patient. Because of this crisis, demand for gold and silver will increase. And it was less than 2 years later, we were at $2,000. So that was a tripling of the price after the Lehman crisis. I think we're in for the same ride. With everything going on with the war and geopolitics, all countries east of Germany are buying and adding to their physical gold reserves. And we've got a BRICS countries talking about the new financial system. And we even had Credit Suisse coming out with a report, several reports by Sultan Pozar, saying a new Bretton Woods system is being designed by the BRICS countries, and there will be a system around commodities and gold. And these are the words of Credit Suisse. It's not Willem Middelkoop.
Do you believe, how successful do you believe the BRICS nations will be? Do you think the United States will just let them do what they want?
No, of course not. So there's a huge fight ongoing. It's really the ultimate fight. It's the ultimate fight. It's the big reset fight. But look at the sanctions. There are only a few dozen countries who have supported sanctions against Russia.
Right.
And if you count the people living in these countries, it's just over 1 billion people, but you have over 140 countries worldwide who don't support sanctions. And then we're talking about over 6 billion people living in countries who don't support sanctions. That doesn't mean these countries support Vladimir Putin, but I think most of these countries are fed up with the double standards, the Western arrogance. And we in the West still think that we can design the rules of the game, and most of the world says, stop. We can play our own game, and they are designing the rules of their game now. And this is a very special fight. It's a fight, of course, between the US and China. And China supporting Russia because it helps them in their fight. So this fight will go on for some time, and it's very hard to envision that the US will always win. But there's a lot at stake for the US.
Do you think we are seeing the US hegemony coming to an end?
Well, at least we're in the last
stages.
Last stages. If history is any guide, on average, a monetary standard like a world reserve currency as the dollar, and most of these systems, they are around for around 90 years, actually 92 years. On average, every 92 years, we get a monetary reset. We had a British pound, of course, up until the First World War, and the Dutch had their golden century, and the Portuguese and the Spanish. So it's time for the dollar to pass and give room for another world reserve currency. The jury is still out. The Chinese aren't ready. What's always very telling that the US economy was the largest economy already in 1870. It was a larger economy than the British economy. It took 70 years after 1870, 74 years, before the US dollar became the world reserve currency. So I think you could say the Chinese economy is the largest economy now worldwide, maybe not in GDP, but if you look at all kinds of other indicators, it's a large economy. So it can take a few dozen years before the Chinese currency will become the world reserve currency. So we're moving away from a unipolar world to a multipolar world, and that's fascinating. And if we study history a bit more, you can see that when these changes occur, it often brings a lot of tension. It often brings wars.
Mm-hmm.
And I'm always very influenced by the book The Fourth Turning, which speaks about this 80-year cycle. Well, the start of the Second World War is 1940. At 80 years is 2020.
Wow.
So the depth of the crisis was 1942. That's at 80 years, that's 2022. So we're right in the middle. So it doesn't surprise me that we have some crisis ongoing. Crisis can bring valuations down, can bring stock markets down. And eventually, huge crises like this are always good for the demand for gold and silver. And I don't have to educate you on silver, but you know the supply and demand situations. This is, I think we'll see a bifurcation of a paper silver price in the West and a physical silver price in the East in a not too distant future. In the gold market, we already see $25 difference between the price in Shanghai and on the Crimex, but that's interesting.
What do you make of that? Like, a lot of people on Wall Street Silver are talking about that. They're seeing some kind of divergence. Can you explain that to our audience? What do you think's happening?
Well, it's quite obvious that the pricing mechanism, as we call it, for gold and silver and many other commodities, the pricing mechanism is on the future markets in Chicago. And the US has designed these very liquid future markets by design, because there was a tool to move markets. If you have enough liquidity, if you have enough cash, you can move the prices. And the US is very aware of this. The Russians are aware of this, the Chinese as well. And then you, of course, have the physical market. And the physical market, sometimes the pricing mechanism moves from the paper market to the physical market. And one great example in our industry, in the precious metals markets, is palladium. Mm-hmm. Study palladium. There was a huge open interest on the COMEX, let's say 6 years ago, 2016. It was like silver nowadays, or like platinum nowadays, or like gold nowadays, huge open interest, especially on the short side. And then the demand for palladium went up because the car manufacturers started to produce more hybrid cars. And right. For hybrid cars, for the exhaust system, you need palladium instead of platinum. It has to do with the cooler temperatures. So then the demand for the physical stuff went up, and then the shortage, well, they were squeezed out of the market. And if you study the open interest now, palladium open interest is way down compared to platinum, silver, and gold. It shows, I should once send you the graph, because it shows that the physical demand can really, kill the paper shorts. And then the price of palladium went up 3x. So the same could happen with silver or platinum or gold in a similar situation.
So you're saying if the physical demand is strong enough with silver, it'll kill the shorts.
Yeah, and I think that's what you see happening now. I think there are many wholesale buyers who are using this decline to put in huge orders for physical silver. And one day, you know, we're already hearing the cracks and we see the signs. One day it will be over for the paper shorts, and people in our industry and investors following us are getting tired of this story, because they've been doing it for such a long time. So what happens, you know, there's one more push down like now, and they're all they're all leaving this market because they are fed up with me and with you guys. And then the markets will turn and we'll see $100 in a few weeks. And it can happen next week, can happen next quarter, it can happen next year, but it sure will happen somewhere the next 5 years.
So let's move on to the energy crisis happening in Europe. It's completely out of control, Willem. And countries are now, you're hearing, they're still closing their nuclear facilities while facing an energy shortage. How bad do you believe this winter will be for Europe?
Well, I don't think the statement is 100% correct. I don't see all countries in Europe shutting down their nuclear power supply, but some of the power plants, nuclear power plants, they just need servicing. It's ill-timed, but we've got Japan opening up their nuclear industry. But let's focus on Europe. Of course, everybody's afraid for the next winter. Everybody's afraid for the energy bills. But we already see governments pivoting, and we saw it first in the UK. Where the new Prime Minister Liz Truss, actually started to hand out money to everybody to pay the energy bills. That's why the pound is crashing now. But we've seen the same comments coming from my own country, the Netherlands, in which we had the start of new parliamentary year last week. Mm-hmm. And the government made clear that all lower and middle income families would be supported. Even higher incomes families would be supported in the first part of the energy bills. Actually, this is the restart of quantitative easing.
Yeah, exactly, because they have to print more money to give to all these people.
Sure. So this is not. It is not promoted that way. Central banks aren't making statements, we'll start QE again, but it is the start of QE. And you also see the interventions on the Forex markets, on the FX. We've seen it in Japan. The Bank of England is expected to do the same. So I think we're entering the phase of state capitalism more and more, in which the state decides who gets subsidies and which markets will get manipulated. And we see with the interest rates, I think the governments will decide in Europe which companies may go broke due to high energy bills, which companies will survive. So it's state capitalism. And state capitalism is, of course, contradictory in terms because, capitalism, that's about free markets. And when the state is deciding all, you can't have capitalism. But I think Europe learned a lot from China.
Right.
Capitalism is quite popular there.
Do you believe that will ultimately fail? Like saying, oh, you can't stay open, these facilities have to close, and with the state being involved, do you think that will ultimately fail?
Well, it can take a long way.
Right.
I'm afraid that we won't see hyperinflation because there are enough tools available in the central banker's toolbox to avoid that scenario. Mm-hmm. But you'll enter a scenario of state capitalism. You'll enter a scenario just like China, that the state will control more and more of the economy, will control more and more of the monetary system and the money system, and they will make sure that Bitcoin and crypto aren't getting too popular. They're already pointing to the energy use. They want to have everything regulated, and I'm afraid that this can go on for quite a bit longer, and we'll see more and more state actors being very active in different parts of the financial system, and we'll lose more and more of our economic freedom, and I'm quite sure of that.
Well, that's not good at all.
No. But most people, if you ask them, do you want to have hyperinflation or do you want to have state capitalism and less freedom, they will opt for plan B, for the state capitalism.
Yeah. So let's move on to the pound. It's losing lots of strength against the dollar. Even the yen, you see, it's being destroyed this year. How does 2023 look? Will the US dollar, do you believe, still be this strong as it is now?
If you study the graph of the US dollar, it's in the blow off stage of a parabolic move.
Mm-hmm.
So this means that's the last stage. That's a violent stage. You know, you get 50% of all returns in a very little time. So the dollar is in for a top somewhere, maybe pretty soon. I think it will top somewhere this year, and then we'll see a correction. And this correction will lead to I think, a revaluation of all commodities. And then people will focus on the fundamentals again. They will focus on the geopolitics again. So I think we're, for our investors, we're at the worst part of the market. There's a lot of fear now. Mm-hmm. You could have a truce over Ukraine. You know, it's another 6 weeks, and then really winter kicks in Ukraine. I think Putin is quite desperate to
get it over with.
Yeah, well, he wants to get as strong as possible before the winter, before he needs to start talking about a temporary truce or whatever. We have a very volatile situation in Iran, so yeah, I think the markets are so depressed now. If you look at put call ratios and other indicators, we're in for a bounce. We're in for a and the next move up could be quite violent because there's so much money on the sidelines. Mm-hmm. and everybody's now everybody's looking at the downside. They all want to sell, but where do you need to go with your money? Real estate is going down, is correcting. The bonds, that's carnage there. So I think there's a lot of money waiting to get back in stocks.
So with all the chaos in the world, economic chaos, where is Willem putting his money right now?
Well, I always stick to my plan. I have a personal plan and we have a fund plan. The personal plan is 25% in real estate, 25% in physical gold or silver, 25% in equities, mainly commodity intrinsic value. Mm-hmm. 25% I keep in cash and slash Bitcoin. So that's my personal portfolio. If you look at the fund portfolio, we are really concentrating on the top 100 of best mineral metal discoveries worldwide, metal agnostic, gold, silver, nickel, copper, platinum, palladium, we don't care. Even uranium is okay. And we're switching a bit more of our portfolio towards the battery metals, the uranium space. So smart. We used to be 60-70% in precious metals. It's more like 40-60 now, and so we like the energy space. I think energy will do quite well. There's a nice correction there as well. So that's our game plan.
That's really smart, because you think in the long term, because of all the electric vehicles coming in the future, you should go into battery metals. Is that why you guys are doing that?
Yeah, battery metals are more than just the rare earth everybody's talking about, or more than just lithium. Mm-hmm. Battery metals are copper, is nickel. You know, these are the huge markets, and of course the cobalt and the lithium are the smaller markets. So we focus especially on the largest discoveries in nickel and in copper. There was a great new nickel discovery recently, Go Metals. We're still waiting for the assays, but it looks very intriguing. So we focus a lot on the early stage stuff, and well, it all goes down now. But we've been here before. We've been here in March 2020. Everything went down. In March 2020, our fund went down 15% in 1 month, and then April 2020 we were up 39%. We had 5 months of double-digit returns. So we know when this is over, everybody wants to buy it back again, and then you have some double-digit returns for some months.
Wow, that's really good. Can you give us any names? Can you give us any great names or picks?
Well,
Your best ones.
well, there are a few stocks are very depressed and which have a lower risk reward ratio than the exploration company I just mentioned, which is more illiquid. But if you look like a company like Greatland Gold is listed in London, and they have this huge gold copper discovery in Australia next to the Telfer mine by Newcrest. Newcrest is developing this gold copper discovery, and it came down a lot. They're fully financed now. That's a very safe bet. There's another gold copper discovery in Ecuador by SolGold. That's very cheap now. There's so many names. You have this wonderful discovery by Philo Mining in the Andes, huge copper gold discovery. So that's some of the names that come to mind. Well, actually, we're investors in all of this place.
Okay, that's really good. Well, Willem, we really appreciate you coming down to Wall Street Silver. It's always a pleasure having you on, and we hope to see you soon.
Okay, thanks.
All right, take care, Willem.
Bye.